and that they're not asking our minority banks to sign on the dotted line with terms that would force them out of business, et cetera, et cetera. So I thank you for inviting me, and I'm here from this point on to listen. I'm through. Eddie Bernice said I had to listen, and so that's what I'm about to do. I'm about to listen to you.
Well, thank you very much, Congresswoman. We have another member, a senior member of that committee from Houston, Texas, Congressman Al Green. I want to welcome you and thank you for joining us.
Wonderful, wonderful member of our committee. And I want to tell you, it's every day that he stands up, either in committee or on the floor, and talks about the racism that has prevented us from being able to have wealth and how it has undermined us. He has no fear. He has no shame. He gets up and he says what needs to be said. Al Green, I'm glad you're here today. While you're listening, I hope you have an opportunity to say something about the invidious discrimination that you talk about all the time.
You recognize.
Well, thank you ever so much, Madam Chairs. And I'd like to associate myself with the comments that were made and those that were recently made by the Honorable Maxine Waters. These are the kinds of things that inspire me to try to do what she thinks I'm doing. So it's my honor to be in your company. It's a pleasure to be with you today. And I thank the Honorable Chairwoman Johnson, who is the Dean of the Texas delegation. Aside from the many things that she has a privilege to do as Dean, I would like to just mention that she always has the privilege of speaking first and last. And when she talks, we listen. She has the voice of what some would say an E.F. Hutton of politics. So I'm honored to be in her company and to have this invitation. To my very dear friend, the Honorable Maxine Waters, who has demonstrated over decades that she is there for the many who have no lobbyist in Congress, the many who have, as a court of last resort, the Financial Services Committee when it comes to issues associated with their finances and their economic opportunities. She's truly been hope to many who were hopeless. She's been help to those who've not had the help that they merit. They've been helpless, and she's been the power that they have lacked in the halls of Congress. So I'm honored to be here with her today as well. I look forward to the testimony. The Community Reinvestment Act, CRA, was enacted in 1977 to prevent redlining and ensure that banks are meeting the basic credit and banking needs of all communities, including low-income communities of color. Regrettably, 43 years since the CRA's enactment, the empirical evidence shows us a disappointing pattern of disinvestment, discouragement, and disparate treatment of Black and Hispanic-owned businesses. There are massive disparities between Black and white borrowers emanating from a quantifiable preponderance of invidious discrimination, yes, Madam Chair Waters, invidious discrimination in lending. By way of example, just days before his resignation took effect, Comptroller Otting released the OCC's proposal to revise the CRA without the support of any other agencies responsible for CRA enforcement. That's unacceptable. The behavior did not go unnoticed, however. The Honorable Chairwoman Maxine Waters led our committee's fight to call for Congress's disapproval of the ill-considered and unilateral changes proposed by Chairman Otting. Here, it is more important today for us to make it clear that people of color continue to suffer widespread discrimination in our country. This public health and economic crisis that we are currently facing has truly exposed and exacerbated the racial disparities in our country. We must strengthen protections for our most vulnerable, not weaken them. We must end redlining. We must end invidious discrimination, and we must hold regulators accountable. And I look forward to hearing the recommendations of our distinguished group of witnesses. And I gladly yield back to you, Madam Chair.
Thank you very much. We're going to start with Mr. Jack Matthews because he's on his way to the airport. We have our witnesses are grouped in categories. We have the infrastructure and environmental development, the infrastructure, business, capital access testimony, and mortgage lending. So we're going to recognize Mr. Matthews, who is very familiar with this neighborhood and has done a lot of investment to give his testimony.
Thank you. Hello, my name is Jack Matthews, president of Matthews Southwest, a developer in Southern Dallas for more than 20 years. I would say a lack of infrastructure dollars in Southern Dallas is a symptom of how decisions are made. Vocal political strength is usually exercised with people who have the time to protect their areas, play their committee games, grab their positive outcome for their areas. Sadly, many in Southern Dallas are trying to survive their own economic situation. And as a result, the crumbling sewer system gets fixed elsewhere. As a result, hundreds of small decisions over many years by local governments, not a big decision to mistreat Southern Dallas, but many small decisions, I believe, have let infrastructure in Southern Dallas get to a fail before it's addressed. The current state of infrastructure in Southern Dallas, it's lacking almost across the board. When an area gentrifies, somehow the infrastructure seems to get repaired. I don't think it's a dastardly plan. I just think the system looks after areas with a strong voice with decision makers. If you're building in Southern Dallas, many times the infrastructure is not ready for you to connect. The public transportation struggles to bring people to jobs. It operates many times in a way that's not effective or very time consuming to the users. There are many barriers to development in Southern Dallas. The declining population leads to a loss of schools and a loss of retail. Declining infrastructure makes it harder to bring in a new population. Developers go where things are easier. As a result, areas are left in neglect or are gentrified. Both of these are unhealthy and economically hurt the current residents of Southern Dallas. The only way I believe to allow the protection of current residents is to bring new residents into these areas without causing problems for the existing residents. A tax freeze for current homeowners and empty lots. The repair of infrastructure can be fully utilized by a much healthier neighborhood. The integration of existing residents and new ones allows for the return of services such as schools and retail. The infrastructure costs in Southern Dallas, they're generally the same wherever they are. However, you have more problems to fix in Southern Dallas because of the many decisions over many years. What happens when you're developing is many times you have uncertainty because you don't know where the pipes are. You don't know so you have a timing, an uncertainty, and a cost problem. So you got three things going against you that you really don't have in other parts of the city. What are the impacts to that? It can stop development. It can delay it. But generally it slows it down at the very least. The infrastructure needs and the barriers infrastructure, every situation is unique. If an area's infrastructure is old, many times plans showing where it is, its capacity are incorrect or incomplete, the cost and timing risk gets added. you know, how do you go forward? The only way I see going forward is a holistic answer, where actually you look. It's one thing to fix the pipes, and it's one thing is to have the lender be willing to lend, and the homeowner being able to stay in that area. So, well, basically, a city today can either leave an area to neglect, or it can be gentrified. You need a third choice. So as you go in and fix the infrastructure, you've got to make sure the people are looked after that are currently there. If you don't, all you're doing is making it easier to have an area gentrified, which ends up in a much worse position for all the residents. The example I think of, we built a house in Acres Homes in just outside the north side of Houston, north of 610. And we built a couple houses, and I looked at the house that had been sitting there for probably 80 years beside us. And I wondered how we affected the lady who lived there. She had 3 kids. She worked 2 jobs, and I found out her taxes more than doubled. So here we are building in a neglected part of the city in Houston, thinking we're doing good things, but really what we did is caused her taxes to double. So a tax freeze for existing residents and empty lots will allow the invigoration of an area. You've got to make the tax freeze, I think, at least 15 years to get into detail. But if you don't do that, and all you do is you fix the streets and clean the pollution and cause the bankers to lend, you have to be careful you don't hurt the current people that are there. A House Bill 1577, which Yvonne Davis put through introduced in the legislature in Austin the last session, it did not get approved, but it was a bill to do exactly that. And I've included it with materials I sent to your office, Congresswoman. So I think it's a good plan that can help see the other side of the situation. So as I said before, it's one thing to fix the pipes, one thing to cause the banks to lend, but we gotta make those neighborhoods work. The only way they work is to get the population stabilized or increasing that allows the schools to work and the retail to work. And right now, as you know, many neighborhoods don't have any of those things working for them. Should Dallas have access to additional funding for environmental cleanup and infrastructure? Absolutely. The city of Dallas needs help. The city of Houston needs help. Big problems in these areas, and whether it was caused by, discriminatory lending, which I think there's a long case to, it's been exacerbated many times over by just that constant downward struggle and people just not being given the tools. And when the tools come to them, sometimes you're forcing out the people you're trying to help. So again, a holistic approach is the best way forward. A chance to fix it once correctly. I'd like to thank you for including me. I'm trying to balance whether I'm going too quickly or slowly for your taste, but hopefully you got my points. I love what you're doing. I appreciate the three of you coming on and pushing this forward. If I can do anything to help going forward, I am. Sign me up. I'd be happy to help.
Thank you very much. Are there any questions between the two congresspersons? Well, we did change the schedule a bit for him to come on. It probably would have, you'll clearly understand his testimony much better when you hear some of the others. But I want to thank you very much for coming. I know he has a flight out, and I appreciate you appearing. And we'll be in touch. Thank you very much.
Thank you. I appreciate it.
Thank you. Mr. Michael Morris. I'm sorry, Congresswoman. You're muted.
Got a problem. There it is. There it is. I'm back in. Thank you.
Okay. Did you want to ask him a question?
No, I didn't, except that there are a couple of things that I'm thinking about. One is I'm thinking about governors and I'm thinking about mayors and I'm thinking about how they handle resources that we're able to amass in the way that we did in the response to COVID-19. And I think Mr. Green has a story to tell about what happened with Houston, for example. The other thing is, in dealing with earmarks and some of the other opportunities, particularly about infrastructure, I wondered, I have several cities in my district, maybe 5 or 6 of them. And some of the smaller cities, they gave us proposals that made good sense and they were well done. And the biggest part of my district, the Los Angeles part, did not submit proposals for parts of the city that absolutely needed all kinds of infrastructure assistance. And so even though our mayor is leaving, I'm going to make sure that our mayors, particularly in my district, who have land use authority, are giving to the member of Congress and what is needed when we have opportunities to direct resources as we had with COVID. And so I don't know, Eddie Bernice, whether this is a good time or not for Mr. Green to tell the story about Houston or whether he wants to tell the story, but it is amazing to me what happened there when there was a refusal to direct money where it should go, despite the fact we had done everything to get the money to all of the cities in the country.
You're muted, Congressman.
Thank you. I think I'm unmuted now. And thank you for the opportunity. People in Texas are familiar with the story. $4.3 billion accorded to help us with Hurricane Harvey and other natural disasters. Houston had about 1 trillion gallons of water inundated on it in a 4-day period. Lives were lost, much damage was caused. And we currently are still trying to get that money to the end users who sorely and dearly need it, but haven't received it because we haven't been able to convince a state agency that it should comply with the parameters of the agreement that was made with HUD to dispense the money. There's much more to be said, but in the final analysis, we have to find a way to make sure that the money does not get caught up in politics. Politics should not in any way encroach upon the needs of people after a natural disaster. And if I just may say this, Madam Chair, to the gentleman who indicated we should have this holistic approach, what you said about a tax freeze to allow the current homeowners to keep their homes will not go unnoticed. That's a pretty significant statement.
You're right.
Because we see what happens with gentrification, and you went right to the heart of it.
That's right.
People who own their homes and their infrastructure is in that community. Their uncles and aunts and people that they've been living with all of their lives are right there, but they have to move away because they can't afford the taxes on the home that may very well have no loan on it, no encumbrances other than the taxes. So it won't go unnoticed. I promise it will not. And I thank you, Madam Chair, for allowing me this few moments.
Well, thank you very much. Well, the next witness, Mr. Michael Morris, is someone that I know he thinks that I don't have any time except to ask him to do something. But he is the transportation director for the North Central Texas Council of Governments. But I go to him for every statistic that I need. and I just know that he's going to find someone to produce the information. We are now looking at an area that was just described by Mr. Matthews, just in a different city. So I'm going to ask Mr. Matthews if you'll give us your testimony.
Congresswoman, Madam Chair Waters, It's an honor to be with you today, Congressmember Johnson, Congressmember Green. My name is Michael Morris. I'm the Transportation Director at the North Central Texas Council of Governments. I'm the Strategy Director to the Regional Transportation Council for the Dallas-Fort Worth region. We serve as the Metropolitan Planning Organization for Dallas-Fort Worth under U.S. Federal Code Title 23 and Title 49. And like Mr. Matthews, thank you very much for the invitation. As someone who knows that transportation investments can stimulate economic development, it is clear that it is much more difficult to create economic development benefits in our poorer communities. That is why I applaud your efforts today. However, I hope to make the case for a more comprehensive, affirmative policy direction than where you're going thus far. The Community Reinvestment Act needs to hold all parties accountable. However, Congress needs to explore other initiatives to level the playing field for all of our communities. For most of our region, our transportation investments create private sector developments under regular market forces. In neighborhoods that demonstrate large shares of Title VI persons of color, as well as higher shares of lower income residents, private sector investment is not as great. The need for public-private partnerships is critical. The Regional Transportation Council, with all of our public sector fund partners, has funded the following projects in the southern sector of the city of Dallas. Interstate 35E Southern Gateway, $450 million. Pedestrian cap at the Dallas Zoo over the freeway, knitting the neighborhoods, $100 million. The I-30 Margaret McDermott Bridge and I-35 interchange, $450 million. Historic African-American Joppy neighborhood improvements, $10 million. Opportunity zone infrastructures in the southern sector, $10 million. Southern sector economic development projects, including Martin Luther King Boulevard, $10 million. Roadway and signal upgrades, $20 million. Sidewalks, $10 million. Bishop Art Streetcar Phase 1 and 2, $40 million. And tearing down the SM Wright Freeway and putting in a new boulevard for economic development purposes in the southern sector, $50 million. These investments have not materialized the economic benefits that would have accrued if this construction had occurred in other parts of the region. Therefore, all of us have a responsibility to maximize these transportation investments. I support tearing down silos and barriers that inhibit economic development for all transportation projects. This proposed new national pilot project contains 10 elements. And Madam Chair, you were talking about the modernization of CRA. Well, here are 10 elements for your consideration. 1, enforcement of the Community Reinvestment Act requirement. 2, creation of a development corporation to aid in residential properties and in all utilities. 3, creation of a development corporation to aid in commercial properties. 4, expansion of opportunity zones or similar tax credit investments. These last 3 elements create the foundation for the public-private partnership. The Development Corporation for Residential, the Development Corporation for Commercial, and a P3 provider managing the tax credits necessary to help on investment. Number 5, Mr. Matthews has already described the creation of gentrification policies to reduce unintentional residential and business displacements. 6, expansion of USPA, U.S. Environmental Protection Agency, soil contamination remediation programs. 7, expansion of our programs in the Metropolitan Planning Organization of U.S. Title 23 related to the flexibility of our surface transportation block grant funds. 8, expand our responsibility as a Metropolitan Planning Organization to create equal access to the internet, leveling the playing field that eliminates food deserts and creating opportunities for telemedicine. 9, expand university and community college programs that help generate the next generation of community leaders coming out of this systematic integration of public, private, and community interest in these neighborhoods, and have individuals come out of these programs to be the leaders of tomorrow. And 10, document these ingredients of a successful program to create a national paradigm for economic recovery for all of our neighborhoods across the United States. Thank you again for inviting me. We stand ready to implement a new approach to aid all the neighborhoods in the Dallas-Fort Worth region. I believe this new pilot initiative could create a new national model for implementation nationwide. Thank you again for having me today. I'd be happy to take any questions you may have.
Thank you very much. Do you have any questions, Congresswoman?
Yes, I think so. Mr. Green responded when he heard about freezing the taxes in these gentrification efforts, which sounds very exciting. Also, I've thought about, and I'm thinking about continuing, that when you have major institutions coming in, or banking efforts or what have you, gentrifying neighborhoods, whether or not there should be a requirement for a plan, not just for the project, but for the entire community about housing and taxes and whatever else may come with making sure that the community is protected in some ways. At the same time, you have economic development that does not hurt and displace. So you think that a plan should be available to communities that talks about how people who've been living there for 20 and 30 years are not going to be forced out. I see that happening every day. Other than what has been alluded to already, what do you think about a plan that must be put forward that we can help talk about what should be in that plan?
So, Madam Chair, I support your position 100%. We have written a white paper inventorying 60 or so gentrification policies across the United States. Sometimes they're implemented in state legislation, sometimes they're implemented by the county, sometimes they're a policy with regard to freezing rentals or having rental subsidies or freezing the tax rate of a homeowner. So we have inventoried those items from across the whole country and have made them available to all of our communities. I think there's two ways you could do it. I think as you rethink CRA, you could have a trigger mechanism that ensures a gentrification policy as a result of a certain investment. You could also do it in our Title 23 and 49 programs. Title 23, as you know, is our roadway investment programs under federal highways. And Title 49 is our investment of transportation investments by Federal Transit Administration. So you could in our upcoming legislation that is under review right now, you could implement at a certain dollar threshold. If your project in Title 23 is over a certain dollar amount, it needs to be accompanied by a gentrification policy. If your investment in the rail side, New Start or some other mechanism, is over a certain dollar amount, it needs to come with a gentrification policy. Why a certain dollar amount? Because those are the type of projects that create the opportunity for new economic development. That's the good side of the coin. The bad side of the coin, as Mr. Matthews argues, it has unintended consequences of forcing residents of that particular neighborhood to no longer have the opportunity to be there. I have told our board, and our board agrees, if we don't have strong gentrification policies on our major transportation investments, someday in the future, the community may not want our major transportation investment because they're afraid of what it may do to their particular community. I'm trying to save lives by modernizing a freeway, or I'm trying to create economic development or re-net communities by depressing a current elevated freeway, depressing it below grade and re-knitting the neighborhood from a decision that was made 70 years ago. And if you don't have an aggressive gentrification policy, you may not be what that community may not want you to provide that opportunity because of the fear you have. So your point, Madam Chair, is one way to get out in front of this is where you're going to have an action that has potential very positive implications on economic development. The other side of that coin is it has negative, unintended elements, which is why I have proposed it as a requirement. Gentrification policy would need to be included in these major investments. And you could do it in Title 23 and 49 on the transportation side. And there's no reason why you couldn't do it in CRA investment side.
Very interesting.
Wherever you put it, that element needs, just like air quality, what is the air quality impacts of our transportation projects? What's the safety impacts? What is the mobility impacts? What is the economic development impacts? What is the gentrification implications? You should require us as stewards of what we're doing in my case, transportation, to have the responsibility, as Jack is indicating, to the communities that we impact.
Wow, that's very powerful, Mr. Green. While you was, just, focusing on the question of tax freezes, I think now we ought to think about a whole plan for gentrification and see what else goes into the plan. I'd like your white paper that you have done and the work that you've done on gentrification. If you get that to me, I am very interested in looking at this issue. It has become a huge issue in this country with communities that are complaining, and certainly in my own district, where one of my cities of Inglewood, California, have had all of the big sports teams move in. We have the Rams, we have the Chargers, we have them all. We love economic development, but with that has come the increase in the cost of housing and rentals, and 90-year-olds on fixed income trying to find a place to move to. So I'm real interested in a gentrification overall plan. And if you will give me that, and I will talk with you further about that.
Madam Chair, if you don't mind, I'll send it through your friend, Congresswoman Eddie Bernice Johnson, if that's okay.
That would be absolutely fine. Thank you.
Thank you, Congresswoman. We intend to compile the written testimony and the documents and present to you. That ends the two of our expert witnesses. And now we're going to go into more of the subject matter witnesses. Our first witness will be Ms. Pearson. Ms. Pearson is the Senior Director of Community Investment of the Dallas Real Estate Council. You're recognized for 5 minutes for your testimony.
Thank you, Representative Johnson. Good afternoon, Madam Chair Waters, Representative Johnson, and the members of the Financial Services Committee. My name is Felicia Pearce, and I'm the Senior Director of Community Investment of the Real Estate Council and TREC Community Investors, a certified community development financial institution, or CDFI, located here in Dallas, Texas. The Real Estate Council, or TREC, is a commercial real estate organization made up of approximately 2,000 commercial real estate professionals and 650 member companies. For 30 years, TREC has been working in low to moderate income communities in Dallas. We also work on policy initiatives at the state and local level in the areas of housing, transportation, and economic development. Our members support the work of TREC community investors through pro bono services and skills-based volunteerism. I have worked in the field of community and economic development for well over 14 years and have been responsible for deploying capital in and providing technical assistance for projects located in underserved communities. As a CDFI, TREC Community Investors provides access to capital for real estate projects through loans, grants, and technical assistance to nonprofit and for-profit organizations that serve low to moderate income communities. Typical real estate projects include small retail, affordable housing, and education and community facilities. We also offer educational real estate programs at no cost to community organizations and members. Now, what makes our organization unique, we provide capital together with the professional real estate expertise of our TREC members to ensure the success of our projects. And we proactively advocate for public policy that supports community and economic development in the neighborhoods in which we serve. TREC Community Investors covers Collin County as well as Dallas County. As a CDFI, our mission is quite simple: to provide capital for projects that do not qualify for traditional bank financing. We provide flexible capital, and that means including allowing for higher LTVs, flexible payment terms that are tied to a borrower's expected cash inflows and outflows, as well as loan subordination. Through our TREC members, we also offer our clients no or low-cost real estate expertise. For potential borrowers that are not ready for funding, we offer 3 real estate education programs designed to train nonprofit boards and aspiring developers. One of the ways the financial institutions invest in low to moderate income communities, including those in Southern Dallas, is through CDFIs. Our sources of funding include banks, municipalities, foundations, and the Department of Treasury's CDFI fund. Our most recent investment to support our work in Southern Dallas was awarded by JPMorgan Chase. In addition, we were awarded a recent $1.2 million investment from the CDFI Fund's Rapid Response Program. As lenders for projects in Southern Dallas, access to capital is a challenge, and we all know that. But we've also heard from our members, small local developers, that the infrastructure in Southern Dallas, it's crumbling, and there has been no investment in decades. In a recent survey of our members, we learned that the cost for infrastructure per unit in a multifamily development is between $35,000 up to $41,000 per unit. So what that means for a 100-unit apartment complex, this represents over $4 million in additional investment, which seriously impacts affordability and feasibility. Another major barrier to development in Southern Dallas is the lack of development. With no development, it is difficult to create a market comp or value so for new developments. There is nothing on which to base value, which is the basis for loan to value ratios, which are the minimum standard that banks have to comply with, and also justifies the financial feasibility of the project. So without market comps, a traditional bank cannot underwrite a project to meet the regulatory requirements that they must follow. A CDFI, on the other hand, does not have those regulatory constraints. And CDFIs are a critical piece of capital in terms of access to capital in low to moderate income communities. Now, in addition to access to capital, we also found that many smaller developers and organizations that desire to build housing and commercial facilities, they often experience issues with insufficient capacity to actually go forward with their projects. Well, a portion of the investments that we receive as a CDFI, those funds go towards providing organizations that needed expertise. So to support our neighborhoods in Southern Dallas, what is needed is more access to capital, but also more public-private partnerships to address insufficient infrastructure. That includes upgrades to roads, utilities, and broadband access, and increased organizational capacity for organizations that are looking to develop properties. So in closing, what we need from Congress, we need more financial support. CDFIs across the country need more financial support for funding. And we also need targeted infrastructure in our cities and in our neighborhoods. CDFIs also need more support from financial institutions. That includes more loan capital. That includes more funding for loan loss reserves and loan guarantees, and also for capacity building. And also we need our financial institutions to partner with CDFIs on financing real estate related projects in our neighborhoods. So I want to thank you for the opportunity to speak on this important matter.
Well, thank you very much. Questions?
I want Eddie Bernice. I'm so pleased to hear the talk about CDFIs, and I know Mr. Green is also. And Eddie Bernice, you have supported us so strongly with what we've been doing with MDIs and CDFIs. As a matter of fact, some of our greatest successes post COVID-19 has been the resources we've been able to get to CDFIs and MDIs. When the big banks created their own portals for the concierge clients in the beginning of PPP and used up the money, and we had to put more money up to put into PPP for the small businesses that didn't get the money early on because of the portals that were put up for the concierge clients. We took another $60 billion and got it to our CDFIs and our MDIs and our community banks. And within hours, they were able to get that money out into the community and to provide access to those who were applying for PPP. On CDFIs, we've started a real revolution. In addition we have some changes that we're making in the Treasury. As you know, we put together as of December $12 billion. $125 billion of that money is just going out to CDFIs. We have revolutionized what we do with CDFIs. We are building a stronger network, and some of the banks are beginning to get loans from the bigger banks with term sheets that are reasonable. And so not only do we have some of the banks that we've been negotiating with who's getting money out to the banks with term sheets that are sensible and does not in any way endanger the minority banks from losing the banks, et cetera, et cetera. I want you to know that at least one of the big banks we had put a cap on their assets in order for them to be able to be involved in the implementation of PPP programs. We allowed them to be involved based on the commitment that they were making to do the loans and work out the agreements with MDIs and CDFIs. And so I would like our CDFI representative here to be in touch with our network of CDFIs across the country. And I'm sure she knows about some of them in the California area, because if it's one place we've had great success with the 12 billion that we were able to get appropriated and the 1.25 that we were able to get out now, it's in CDFIs that I'm really proud about. And Mr. Green has been a part of this, and you have supported everything that we've done, Eddie Bernice, in the response to the COVID-19. And I want to thank you for your strong support for that. And Mr. Green has been a part of every inch of what we have done for our CDFIs and our MDIs and our community banks.
Mr. Green, you're muted.
Thank you. Thank you very much. I'll be very brief. I'll associate myself with the comments of the Chairwoman Waters and concur with her statements about Chairwoman Johnson. But I would just add this: Chairwoman Waters has done something quite unique, and I think it will be replicated with other committees. She initiated and installed a diversity and inclusion subcommittee chaired by Congresswoman Beatty. And that subcommittee has really helped us to inculcate these big banks into a new culture as it relates to CDFIs, MDIs, small banks. It really is making a difference. So for the person who just spoke, Ms. Pearson, I want you to know that that there is a systemic approach being taken to this systemic problem. And that's what's important, not something that is just one piece of legislation. She's put something in place that will be there long after we're gone, because the subcommittee is something that I believe will last for a great while. So thank you, Madam Chair, for what you have done to put in a systemic means of dealing with these many problems that have plagued us for decades, years, hundreds of years, in fact. Thank you very much.
You're so welcome. And I want to make sure that all of our CDFIs have access to this brand new money. So if there's some information that's needed about application, et cetera, please call us because we will certainly help you to have an opportunity to get some of this brand new funding.
Thank you very much, Ms. Pearson. I'll now call on the Business Capital Access testimony by Mr. Matt Houston, Professor of Leadership at the University of Texas, University of North Texas in Dallas.
Good afternoon. Thank you, Congresswoman Johnson, for serving our district. Madam Chair, thank you for this opportunity. Congressman Green, thank you for moving on and upward and doing the work in the Houston area. My name is Matt Houston, and I am an entrepreneur, an educator, teaching entrepreneurship and leadership at the University of North Texas at Dallas School of Business. Today, I'm speaking as a former president and immediate past chair of the Dallas Black Chamber of Commerce, the DBCC. The DBCC serves as an advocate for the creation, the growth, and the general welfare of Black-owned businesses and organizations across North Texas, and is the oldest Black chamber in the country, founded in 1926. I'm here today to speak from an advocacy organization's perspective on the long-lasting impact of the neglect of Dallas's Black ecosystem due to redlining policies and practices exercised in Dallas throughout our city's history. It is documented through articles, through publications, reports, etc., on the discriminatory practices of redlining in the 20th century and its impact on urban cores nationwide, preventing communities from developing healthy economic ecosystems for sustainability. The lack of resources can result in high unemployment, high crime, lower property values, and the creation of blight. In Dallas specifically, a lack of attention to build infrastructure in Southern Dallas, a community that is populated primarily of historically marginalized populations, resulted in a gross disparity between the haves and the have-nots in this city. For business owners who live in these communities, this norm places them at a severe disadvantage with their privileged counterparts. By not having the proper foundation to create a business through conventional methods, one must use unconventional means to fulfill their entrepreneurial dreams, resulting in being out of compliance with traditional banking practices. The choice community business members make of robbing Peter to pay Paul unfortunately can result in undesirable outcomes. Financial professionals who are normally supporters of the Dallas Black Chamber usually assess the businesses with one or more of the following characteristics. One, they normally say businesses have poor personal and or business credit. Two, that they have a lack of equity from the borrower or business owner to support their credit request. Three, there's a lack of sufficient viable collateral to support their capital request, inadequate secondary source of repayment, or an inadequate financial support of guarantor. When heard individually, it's easy to assess that that entrepreneur or that business owner is not prepared to expand their business at this time. But that's not what the trends show in our community. It shows that when a group of people, typically for this case, African-American business owners, when a common theme of that is happening, the trend of applicants from the same geographic area or background that's a red flag that there's an infrastructure flaw that needs to be addressed. That's why this hearing committee is needed. To correct this problem, I propose the following solution should be suggested to improve the environment for historically disadvantaged communities. One, you should have more community members in decision-making roles of major financial institutions. We have people that are qualified to do that. Let's do so. Two, you should have more intentional investment of the Community Reinvestment Act, CRA, that was mentioned earlier. It was created in 1977, and we definitely need to figure out the blind spots and be able to course correct so that we can impact our communities. Thirdly, we should financially support community-based fund programs like the Dallas Black Chamber Guarantee Pool Fund. That pool fund was initiated by our current president, Harrison Blair, who had a vision to create a pool of businesses within our community to provide support so that when approached by a bank, they could show the collateral that there are other businesses that can vouch for that business. In fact, between June of 2020 and now, Harrison Blair assembled a committee of chamber members, CDFI leaders, bankers, and community consultants, and partnered with the Boston Consulting Group in Dallas to create a strategy to present this to major financial institutions. That type of collaboration lasted about 6 months, and it was a great collaborative discussion of about 15 individuals solving the problem to provide access to capital to African-American businesses. And lastly, we should invest more in organizations that provide business development programs like the Dallas Black Chamber of Commerce or other community development financial institutions. Why? CDFIs. Why? Because the community trusts us. Like I said, we've been in existence for 96 years. CDFIs are pivotal in the development of small businesses in our communities. And there is a level of trust that the executives, that the members who are serving in those organizations daily have, and can disseminate that infrastructure, that system directly to our end user, which are our community members and business owners. With those suggestions, I defer the rest of my time to the floor. Thank you all for your time and have a great evening.
Thank you, Madam Chairwoman.
Thank you very much, Eddie Bernice. Some of the recommendations that are being put forward certainly make a hell of a lot of sense. And I think the gentleman that just spoke, what was his name again? Matt Houston?
Yes, ma'am.
Okay, Matt Houston. Some of the ideas that you have put forward are absolutely in process. I don't know if you know about all of the latest work that's been done with CDFIs. Are you familiar with the money that we have, the 12 billion?
I have. Yeah, I have. And it's great work that's being done. So,
and we want to make sure that all of the CDFIs have access. And we're also changing some of the rules in the Treasury Department about how it funds CDFIs. And so, like I said, we have a lot of work that is going on and a lot of resources that have been developed. And of course, I encourage CDFIs to be involved in joint ventures and all other efforts that may make good sense in order to get that capital that's needed, as you said, to service our community. One of the things that you just mentioned that it's really caught my ear, and that is this collective collateral that can be put together in order to get over the accusations that they can't give a loan because we don't have collateral, et cetera, et cetera. I like that. And I like being able to talk with, some more about that because that is a big problem. We have people with great ideas and great talent. And if they had the investment on the front end, they would be able to expand and to grow. And of course, they should have even more capital to expand and grow, and so that they can do what needs to be done for any business. But they don't have the collateral. And so I like that idea. Do you have anything in writing on that about
Yes,
what
ma'am.
that experiment was?
Yes, ma'am. We have a strategy deck that I've submitted to Congresswoman Johnson's office.
Okay. All right. Very good. Eddie Bernice, would you make sure that Mr. Green and I have a copy of that so we can take a deep look at that?
Sure.
And
Be
the
delighted.
other I'd like to ask Mr. Houston is, you didn't mention incubators. And I'm wondering whether or not you think there's any value in incubators, because I have thought for a long time that some of our businesses who have talented people are so focused on the gadget or whatever, that they fail to pay attention to all of the supports that businesses need, the insurance, the taxes, and all of that.
Yeah.
And so I'm thinking that incubators, what I like the idea of is a central kind of incubator with all aspects of the needs of the businesses incorporated into the incubator, so that incubator may have someone in there that's an expert on insurance. And so all the businesses can say, take care of this. You know what I mean? What
Yes,
do you
ma'am.
think about that?
So I am in total agreement that incubators are needed and are necessary for entrepreneurs who are in the SME or who's a small business ideation stage, who do not have the resources to have, tell my students, solid ABCs, an accountant, a banker, and counsel, who can't afford all three of those at the same time, to be a part of a system that can assist that. With this conversation, the Dallas Black Chamber of Commerce and also other business organizations in the economic ecosystem should work together, because there are different niches and roles for each organization. What we don't want to do is to be convoluted and want to be everything to everyone, because that does not make us efficient. We are advocates for businesses who are established, who needs to ramp up and have larger contracts in this Dallas area. That's our bread and butter. Incubators we work with so that we can ensure those businesses can be prepared to have a large multi-year contract. So we work together so that this ecosystem can thrive in America.
Very good. Now, there's one other thing that Mr. Green and I really do need to strengthen. You know, even with CRA, that has not been what it was supposed to be, the mission that has supposedly been the mission of the CRA has not really been realized, and that's why we need this revolution. But
Right.
Did you know that in CRA, we always have had the opportunity for communities to go to banks and say, open your books. We want to see what you have done in your lending in this area, but we have never supported and strengthened that so that it really does happen. And I think there's no better organization to do that than the Black Business Associations. What do you think about how we can develop part of what we're revolutionizing in CRA in order to strengthen the ability to have the books opened on what the banks are doing in the communities it's supposed to serve?
So since 1996, I believe that was one of the first reauthorizations of CRA. Chambers of Commerce have been involved in those types of things. And one of those service offerings that banks provided were programs to our organizations, whether it's through educational purposes. I know that we have a chamber member here, Tim Williams, with Williams Chicken. And one of the programs that banks and the Chamber of Commerce have partnered together with in the past is to create those trainings and workshops. So in theory, I do believe that CRA is doing things, and and that it's needed. What I see from a local standpoint is that things need to be improved. We're not saying got you. We're not saying we know what's right. What we're saying as an organization is that we're at the table to want to get it right. And what that means is we want to ensure that the systems that are in place federally have an effective system so that it can be disseminated to our community. And unfortunately, my observation is that there are some failures in that dissemination of those resources. And so it's imperative for me on my end as an advocacy organization to bring that up to any avenue that I have, so that we can then realize all of the work that's been done in Washington, D.C., and all the work that you've done for our communities can be realized not only in Oak Cliff and Dallas, but in our 25 cities that have Black chambers in the state of Texas, and our over 120 cities with chambers across the United States.
Okay, well, thank you very much. And while we are working on the CRA revolution, as I call it, I would appreciate any input you can get to Ms. Johnson, who will get to us, so that we can take a look, because what I'm really looking for is I'm looking for advice that comes from the community of advocates about the changes we have to make and what we have to do. And I'm particularly interested in stopping giving credit to CRAs for that $500 contribution they give to the church and get a banner at the time that the church does its fundraising for the year. No more of that. It's got to be more substantial. It's got to be more real. And so I look for you to, and our local community advocates, to get that information to your elected officials, and get you, as we talk about Dallas, get it to Eddie Bernice, so that we can include information that you may have that will help us revitalize CRA.
It's in the report. Thank you, Madam Congressman.
Thank you very much.
Thank you very much. We now have Mr. Tim Williams, who is Director of Operations and Franchise Development for Williams Chicken. You're recognized for your testimony.
Good afternoon. Good afternoon, Madam President, Ms. Waters, Congresswoman Ms. Johnson, Congressman Mr. Al Green. Thank you for the opportunity to allow me to provide a written and oral testimony to the committee regarding corporate redlining. My name is Tim Williams, and I am the Director of Operation and Franchise Development for Williams Chicken, Williams Licensing, Williams Fried Chicken Property, and all the entities are based here in Dallas, Texas, and I refer to them as Williams Chicken. I have worked for Mr. Williams at Williams Chicken for over 25 years. In addition to serving with Williams Chicken, I have served on numerous boards, organizations, and community events. I'm a proud member of the Alpha Fraternity Incorporated. As a member, I have worked very hard to raise millions of dollars for scholarships, for our Afro-American program and other programs in the Dallas-Fort Worth area. We mentor and support these young men and girls of color in the Dallas-Fort Worth market. Finally, at this note, that I am a board member of the International Franchise Association, better known as IFA. The IFA membership organization is for franchisors, franchisees, and franchise support people. Before I share with you my concerns and my experience regarding banking redlining in Dallas Black and brown neighborhoods and Black-owned businesses, I'd like to give you some contents about Williams Chicken. Williams Chicken is a fast food restaurant operated and franchised with over 30 stores located throughout North Texas, and soon to be introduced to two new markets such as Chicago, Kansas City, and Atlanta. During the pandemic, our franchise partners' average volume per unit was over $800,000, and the corporate average a little bit over $980,000. Our founder, Mr. Arthur Williams, have served Williams Chicken and have started and owned Williams Chicken for the last 35 years. Williams Chicken in its franchise system have grown from 15 employees to over 600. have built a ecosystem of strategy, partners, entrepreneurs, and a host of other vendors to support for over $28 million a year in operating capital. William Chicken also can be found and have been featured in Black Enterprise and is one of the top 10 African American franchisors in the country. The interesting thing I should share with you about Williams Chicken is that we are in the 75216 zip code in Dallas, Texas. This is the zip code where most young people are graduating from high school to prison. Our headquarters is located in this community, what used to be a former McDonald's restaurant, which we turned into our corporate office that we have been in for the last 20 years. As our enterprise grew, we could have very easily left our community and went to the glamour and glitter of downtown Dallas high-rise and corporate office. But we chose to be committed to our community, our corporate mission, dedicated to serve, grow, and give back to the community, and our corporation and our proximity to our original base to keep our headquarters in the zip code 75216. Sharing my testimony today is not solely for our business, but it's for nearly 3 dozen African American owned business that is our partners that share our success. As one of the top 5 African American franchisors in the country, we feel a deep sense of responsibility and the duty to the empowerment of other African American owned business. We do this by having Black franchisees, a Black lawyer, a Black CPA, a Black marketing PR firm, a Black owned facilities partner, a Black owned technology partner, a Black owned roofing partner, a Black owned landscape partner, a Black owned asphalt company. So we share, but at this point, I'm sharing this information to let you know that our business is impacting the economic system in our community, which we are in. So yes, we feel quite honored to be privileged for our testimony to express our concerns regarding minority business minority businesses MBEs assessed the lack of capital through the Dallas-Fort Worth market for the minority business community. As recently reported on WFAA TV, affiliate of CBA News, noted that there was a credit desert for residents and commercial lenders in the southern Dallas County. This desert can be attributed to failed government policy and lack of oversight. Let me take a moment to share my turned down story for a creditworthy 35-year-old multi-million-dollar corporation denied a $200,000 line of credit by a national lender by the name of Chase in October of 2020. We feel that was a travesty among us, especially in light of the fact that Williams Chicken has been a customer for Chase for over 2 decades. We deposit millions of dollars a year into the bank annually, maintain thousands of dollars in balances in deposit, 6 figures a week. On an average, Williams Chicken corporate stores alone, not including my franchise partners, we deposit between $180,000 to $200,000 a week into Chase Bank, and they denied us a $200,000 line of credit. Not only did they deny it to us, I'm not going to go through it. Not only did they deny it to us, they just told us no. They didn't say we can do this for you or that. They said no. And the reason why they said no, that they said our asset ratio to our debt ratio was inefficient for them. Keep in mind, small businesses, if you're a small business owner, by the time you have your personal credit, your house, your cars, your kids, your credit cards, then you have your business expenses too, that sometimes you don't have that 700 or 780 score. But what I find is that they don't make the playing field level for us. I had a conversation with Chase 2 weeks ago. Some young brothers that play golf in the golf tournament that we have. found out who I was, and they asked could they come see me, and they represent Chase. So I told them my experience about Chase. And I said, brothers, I want to give you an opportunity to be successful because Chase is not doing it for you. I said, they won't tell you what the minimum credit score you need to have, what the ratio, the debt that you need to have. They just ask you, go out there and get some documents and bring it back, and they give them a reason to say no, and they say they didn't qualify. They have no intention, as far as I'm concerned, making African-American loans in the Dallas-Fort Worth, south of 30. So I took the same $200,000 request to Happy State Bank, which is a regional state here in Texas. They approved my line of credit with less than 30 days. Not only have they approved my line of credit, they had also gave me a $4.2 million loan on when I took all our real estate for the real estate we own, operate our restaurants on it, and put it to one company, which is called Williams Chicken Properties. That way I have my business separated from my real estate. Same request I made maybe 4 years ago to Chase for $1 million loan to do the same thing, was turned down. Now, I have a degree in finance and real estate from Texas Tech University. I sit on the board of the International Franchise Association. I specialize in financial real estate. I think I know just a little bit about what it takes to get a loan. But if the field is not fair for us that's been in the business for 30 years, how do you expect someone who's trying to get started, that's maybe 1 or 2 years old, to be able to go to some of these banks and get on? And I'll go back to what Ms. Pearson and what Matt talked about. The CDFIs. CDFIs saved us probably 10 years ago because we could not get a loan through regular banking. So I take my hats off to Texas Mezzanine Fund here in Dallas, Texas. Victor Elmore is the president of it. They do it right. I have seen my franchise partners there to get loans. I have seen other business associates that I do business with to get loans because they can't get it in these local national banks. So, Ms. Waters, I ask you, keep funding those FDI, the FDI companies and the CDEs, because at least we have a fighting chance to get a loan without having to put up everything you have or get a flat no because you're not in the right zip code. And I'll leave you at this. Got a young family that's trying to buy a franchise. It was buying this franchise from us that already have proven that their sales was over $580,000 a year. And the reason why this franchise partner is selling this location because he had other business and he don't have the time to really take care of this franchise. So he decided to sell it to me. He came to me and asked me where I find somebody to buy it. I did. The sales started slipping a little bit. The lending institution turned him down because they said the sales was going down, knowing the reason why he was selling it. But they still said no. And guess what I'm going to do? I'm taking that same future franchise partner to Texas Mezzanine, and I will get them a loan. Thank you for your time, and thank you for being concerned about what's going on in our community. And once again, Ms. Waters and Ms. Johnson and Mr. Green, thank you for what you do, and thank you for your service. Thank you.
Thank you. Thank you.
Thank you very much. Any questions from our Congresspeople?
I don't know if I have a question as much as I have a statement of congratulations. What we just heard from and about was a successful Black-owned business who not only is a Black-owned business, it is one that has reached out to all their servicers and people they do business with to ensure that other Black businesses could earn money and a profit doing business with them. That is admirable. That is commendable. And I take my hat off to Williams Chicken for what was just described to us. I also understand the discrimination and the exclusion that he identified. And what I do until we can undo histories of organized public policy that created discrimination and exclusion on individual cases like the one that he described about being denied a $200,000 line of credit. I take individual complaints like that and I call the bank. Now they tell us they don't want us working this way and they try to stop us from doing this kind of work, but I can't be stopped. I mean, I do it. I call and I want to find out exactly what has happened. And we ask, but we can't say we can make you do it, but we say, we want you to review this application. And in reviewing it, I want you to make a determination whether or not this person is absolutely in line or should be in line to get a loan. And so what we do is we try to show the banks on particular information that's brought to us about being turned down, that we just caught what you're doing. I have one such that I'm working on now. As a matter of fact, this particular complaint came from a well-established business with collateral. And the thing that I'm finding out is many of our businesses who have their bank accounts in some of these big banks can be with them for 25 and 30 years and not be appointed a banker that will take care of them. And I'm going to stop that business from happening. I have people calling me who've been a customer of a bank, again, for 25 and 30 years. And I ask them, who do you go to complain about not getting a loan or not being treated right or something that you want to do? They said, well, we call. And I said, well, who do you call? They don't have any bankers. They're not assigned bankers. This does not happen to white business people, and particularly ones who have been customers of the bank for years. And I am absolutely looking at this and seeing what can be done about it. I know that we can't run the banks, but I also know that we've got to figure out how to deal with racism, discrimination, and exclusion. And this business about turning down a $200,000 loan in the way that was described to us is what we have to figure out how to stop. Now, Mr. Green has legislation as chairman of our Oversight and Investigation Subcommittee that would root out discrimination by lenders. But I think Mr. Green's emphasis is on mortgages. Is that right, Mr. Green? Are you still there?
I am here, and yes, ma'am, it is. But I do have legislation, HR 166, the Fair Lending for All Act, if I may speak on it.
Yes, please do.
For those who do not know, and I strongly suggest that you prepare to be shocked. For those who do not know, if you knowingly seek to defraud a financial institution, you shall be fined not more than, as I said, prepare yourself for a shock, not more than $1 million. Not more than $1 million if you seek to defraud a financial institution, and in prison for not more than 30 years or both. Well, we don't have similar penalties for persons who defraud those who are seeking loans by preventing them from getting their loans for knowing and willful discrimination against those who are seeking loans. So this legislation seeks to level the playing field. If a person knowingly and willfully discriminates against a person who's seeking a loan, there ought to be some penalty for that. This legislation provides a penalty for it. And with reference to what was said a little bit earlier about qualifications, I want you to know that this committee, under the leadership of the Honorable Maxine Waters, does not have questions that are off limits. The questions that we many years ago wouldn't ask for fear that they might be considered in poor taste are being asked now. How many Black people do you have in the C-suites? How many people of color, generally speaking? How many women? How many people who self-identify as LGBTQ? the questions that we have to ask to find out who's there and what they're doing are important questions, because there are people who are qualified and we want to get them into the C-suites. Finally, the chairwoman indicates that she calls these banks. She also calls them out at hearings. We have on the Financial Services Institution now, committee now, the ability to call people out at the hearings. Who's going to succeed you when you leave office? We had the big banks before us, and when this question was proposed, there was not one that indicated that the person who would succeed would be a female or person of color. They were all men. Now that has changed. After one hearing where the question was posed, things have changed. So I'm proud to say that what's happening on financial services is not, we haven't cured the problems, but the problems that you're bringing to our attention are the kinds of problems that the Honorable Maxine Waters would have us deal with. Thank you so much. I yield back.
Mr. Green, before you yield back, as you talk about the fact that we are bringing the major CEOs of the biggest banks in America before us, and we are raising the kinds of questions that would not have been thought of years ago. I want you, if you could take a minute to talk about how we have geared in on Wells Fargo, for example, and that Wells Fargo has a new CEO, relatively new, who wants to change the culture based on what we've been able to identify that's been wrong with the bank. And what happened is when we called them before us a year or so ago, the CEO stepped down and 2 board members quit because they had been there while this culture of discrimination and predatory lending had prevailed. And so now with us gearing in on it and bringing them before us, we are changing cultures, and we're doing away with the banks running the Congress of the United States and what was the old banking committee, et cetera. It's a lot of work, and we take on a lot when we do it. And we know that oftentimes the big interests are going to come after us in our campaigns, and we don't have the kind of support that we need to be totally independent of contributions, but we're working and we're doing it even under threats and other kinds of things that happen, because we believe that discrimination has been so destructive to our abilities to have a decent quality of life and amass wealth. We're prepared to make whatever sacrifices we need to make to change this culture. So thank you, Mr. Green, and thank you for being a part of having the courage to say what needs to be said, to do what needs to be said. And I think the bill that you are referencing now about how the banks can accuse and one could go to jail and be fined, millions of dollars, and the customers who are discriminated against, or you can identify fraud, et cetera, are penalized, but we don't penalize the banks in the same way. We're able to fine the banks, but the fining of the banks is just the cost of doing business. And so when you take a look at how much the big banks are paid out in fines, you know how much money they're making and their ability to pay these huge fines and just keep on going. And so we understand all of this. We really love your input, but Mr. Green, that bill that you're talking about goes right to the heart of what Williams Chicken was talking about in terms of, this discrimination in lending. And I thank you for the bill, and I'm going to do everything that I can to get it up and out of committee and fight for it on the Senate side with someone that will partner with you on it.
Thank you. Madam Chair, if I may add one additional comment with your permission.
Sure, absolutely.
Thank you. The bill also has testing, and it's good for Williams Chicken to know and for Mr. Houston to know that we know that the empirical evidence exists, but we have difficulty acquiring the evidence. But if we can send people in, all who are equally qualified, and have some rejected for reasons associated with other reasons other than their loans, their credit applications, then we acquire the empirical evidence necessary to prove the case for persons knowingly and willfully discriminating. So this is not something that's being done arbitrarily and capriciously. It's being done with a methodology that has been time honored in terms of its being efficacious, and that is testing. I'm so grateful that we've been given the opportunity to do this, because this Congress has evolved exponentially over the last 6-8 years. It really has. And I'm telling you, you're looking at the change that you seek in the chairwoman that sits. Thank you.
Thank you very much. We have two more witnesses, and I think we have time to get to both of them. We have the business capital access testimony by Dr. Natalie Stimson next. She is a dentist here in Dallas. Dr. Stimson.
Good evening, good afternoon. Thank you again, Madam Chair, as well as Eddie Bernice Johnson, Congresswoman Johnson, and Al Green for being on the call and allowing this opportunity. Excuse my voice, I'm getting over some allergies. So can you hear me okay?
Yes, we can hear you fine.
Okay. As introduced, I am a general dentist. I'm not on a large scale as the transportation infrastructure, but I'm a vital person in the community. I do provide oral care. Medicine is definitely something that's under looked at in the, low income areas, and is a huge need. And being a dentist, that is something that I strive to try to provide to my local patients in the area. There are a lot of barriers that dentists go through to be that voice in the community. We go to get loans. We have schools loans that we have taken out, and then we graduate. We want to be a voice in the community and take out loans, but we're denied because we have so much credit and so much personal baggage. They look at it and say, you know, you're not a fit because you don't qualify, because you have ABC against you. And that prevents us from being that beam in the community to provide true care to patients that need it and that look like us. A lot of medical doctors and dentists that are out in the world don't look like me. They look like my counterparts. And as a person growing up, I was around Black professionals growing up, and I wanted to make sure that I provide that same look in the community. And that's what I'm striving to do as we speak now, going through all of this. So I have been denied loans, as Mr. Williams has said, because of inexperience and quote unquote, not enough revenue to make the qualifications for the business loans that have been, that are needed. But I want to be a voice and provide what I need to provide to the patients. And if given the opportunity, can do that. So that is what I am striving to try to make a voice for the dentists in the communities in the medical field as well. So that's what my role on this call is, to help people in the medical field get money and funding to give back to our local communities to provide proper and quality care to people who can't get it. And I believe that a solution to do that is to have the right people in the industry to understand the industry. In the bacon industry, sometimes you have people who are giving loans, but they don't understand dentistry. They don't understand the parts that to get equipment, what it takes to set up an office. You just have somebody who does traditional lending talking to a dentist. It does not help that person getting the loan because they don't understand what it takes to become a successful office in the world. So that is one of the solutions that I suggest that give to have the proper people in the industry to be the forefront to help give business loans to dentists in need. Pretty much sums up what I have to say.
Let me ask you a question.
Yes.
There are a lot of student loans
Yes,
And especially with the medical professions, the physicians as well as dentists.
yes.
Has that been a handicap to have that student loan?
It has. It was in the beginning, it was, but I was kind of fortunate to where my student loans kind of went away quickly. But I know my counterparts, they do have that hiccup against them to where they are sometimes forced to file bankruptcy because they have so much debt and are not able to get loans. And again, when you file bankruptcy, that also brings another handicap to you trying to get capital, because they look at that and you have a certain time frame that you have to wait to get money. But again, something that you can't control cause you to get a bankruptcy, and you're denied something and you have to wait to be able to provide a service or work for somebody else and be limited on what you can do for the community.
Any questions of Dr. Stimson?
Well, not so much questions as I understand exactly when you start to talk about student loans. There's a lot of attention. Eddie Bernice, all of us are wanting to do something about forgiveness of student loans under certain conditions. And I'm also looking at the interest rates on student loans, I think in the private sector, where now we're in an economy where the lending, the interest rates are very low. I'm just reminded that the interest rates on student loans are at, way much more than the interest rates, in the open market on, mortgages, et cetera. I'm told that these student loans are 8, 9, 10%. And we're down to practically zero in the housing mortgage. So I'm taking a look at that. And also, I realize that going into business, you need this equipment, and needing the equipment, which is costly. My sister is a dentist also. And the bank being able to almost legitimately say, well, you don't have any experience. But I want to tell you something. Those years that you put into becoming a dentist should be enough to get you a loan. You don't spend that much time working in this medical profession to become who you are and not pay your bills back and not want to be the kind of provider of services that can grow and expand. So I don't buy particularly for medical professionals who have invested all of this time, energy, and money into the profession, that you can't get a loan because you don't have experience. Hell no, you don't have experience. You just finished, getting the experience that you need. You're now a professional. If you get the business, you'll make the money and you'll pay them back. And so we need to take a look at how we influence the banks on looking at the lending policies differently. And I think it's time for us to look at and talk with banks and see what we need to do legislatively about the lending practices that have been developed historically that are so exclusive. And it's not only hurting, businesses such as yours, that in the way that you describe, all of these millennials who want to get a loan, and the banks are saying that you have to have been on your job for the past 5 years. Millennials don't stay on jobs 5 years. And they're in the gig economy, and they're working 2 and 3 jobs oftentimes. And they change jobs because they seek opportunity and they go for it the minute that it happens. And so I'm saying, banks, you got to look at different lending criteria. It's not like that anymore. Just as the Williams Chicken people said, we look at how do you collaborate, and you have this kind of collateral that is joined by several business people or businesses in the community to say, now we got the collateral that you said this business did not have. So we really are looking at an industry or industries who have the responsibility for lending, who are operating on old assumptions and practices that need to be changed. There needs to be a revolution in lending practices. So thank you for coming today, Doctor. We understand exactly what you're saying, and we appreciate your coming back to the community to provide services. and particularly as a dentist, where so often dentists are not sought out for the children because it's always seen as an expense that you can put off. You don't have to deal with now, that we'll get it sometime later. And some people, I have to tell you, dentists are just scared to come. But anyhow, you're absolutely right, but you fall in that category of people who are giving us the information and concerns about lending in the banking community that we're looking at. We're looking at all of this and we're moving as rapidly as we can. And like I said, we're proud how far we've come with the CDFIs and the MDIs, but we've got more to do in lending. And we got to deal with these big banks for sure. Thank you.
Thank you.
Thank you. Our final witness is Ms. And thank you very much, Dr. Stimson.
Madam Chair, may I just make a brief comment? I promise I'll be brief.
Sure.
All right, thank you. I just want to indicate that for those who may not know, if you work for the federal government, you can get up to $10,000 annually that will be contributed to the payment of your student loan. Wow. $10,000 annually. I'm hopeful that we can at some point allow that same opportunity to occur with people such as the dentist for coming back to the community where we don't have the dentist, where we need that kind of help, and let them get the same kind of benefit. That working for the government doesn't give you any special opportunities that other than you get that payment taken care of. Why can't we allow that to happen to people who come back to the community? I just thought I'd mention that to you. It's something that I've been exploring because I know that if you go into certain places in rural areas, there are certain benefits that you get that will accrue to you. And I'm hoping that we can do a similar thing for persons who come back into LMI communities to work. Thank you very much, Madam Chair.
Great idea.
Well, thank you very much. There is a loan forgiveness plan when you go to underserved areas. We might need to redefine what underserved is. They're not all rural areas. Our final witness today is Mr. Treswell Livingston, who is a real estate broker, and I think he's going to testify on home improvement loans. Mr. Livingston, you recognize. You're on mute right now. Yeah, good.
Thank you, Congressman Johnson and Madam Chair and Congressman Mr. Green. It's a pleasure to speak before you. As Congressman Johnson said, my name is Treswell Livingston. I'm also the president and CEO of a nonprofit called Aid Services of Dallas, whose mission is to create and strengthen healthy communities through the delivery of affordable, service-enriched housing for individuals and families living with HIV or AIDS. The mission includes advocacy, education, and the development of affordable housing options and community development opportunities, both for residents living with HIV or AIDS or for economically disadvantaged people. My story today is really a personal story just on my own experience. So I am an example of lived experience. I reside in what is known as sunny South Dallas, Fair Park, an area of Dallas that was integrated in the 1960s. My home ownership experience started when I returned home after graduating from college. Determined to buy my first home, I placed a 6-month lease on my apartment and began my search. At the time, my budget was $35,000. That loan would allow me to manage my expenses on my wages, which was about $14 an hour. My job at the time was a housing counselor, a case manager equivalent, that charged me with frequenting high-income neighborhoods with low crime rates and low minority percentages as a part of a targeted rental program called the Walker Voucher Program at the Dallas Housing Authority at the time. As part of this engagement, I learned of varying communities in the suburbs of Dallas, near schools and on bus lines, ideally near grocery stores. I loved that aspect of seeing the community, talking to landlords and visiting inside different apartment homes. So much so that I began to search condominiums in these areas for myself in my downtime. I was so excited when I found my first condo. As I recall, the home was listed for about $38,000. I was able to get it under contract for about $35,000 after negotiations. I had been pre-approved from Washington Mutual at the time. I had a 30-day close. I recall being called by the seller repeatedly asking me, "Hey, Traswell, I haven't heard anything from anyone. Are you sure you're approved to buy this home?" I would answer yes and call the loan officer. This circle went around for several days until weeks went by and I lost confidence with the lender. Often they wouldn't return my calls, and when I did catch them by phone, they would tell me to be patient. Eventually, I took my contract to another lender. I believe it was Mortgages USA at the time. They too told me that they could approve me based on my credit score and verified income and tax returns. They forwarded me my loan. They forwarded my loan several weeks later to another private loan officer that I can't recall the name of. Needless to say, the lender was not able to get my purchase loan approved. I admit at the time I had a 660 credit score, but I would have not gone forward with the pre-approval had the pre-approval not being informed to me that I was able to get closed. The seller, out of frustration, eventually did not extend the contract offer. We passed the closing dates one too many times. The title company returned my earnest money, and I was out of my $50 option fee. This roller coaster was a very frustrating experience for me. Everyone I spoke to seemed to tell me the same thing. "Oh yes, we can get you closed on this deal, no problem." I don't know if they weren't sincere. At the time, I didn't know if they weren't sincere or they simply just weren't able to fund it for other reasons. I was never really told. Later that year, I was able to buy a home through an owner finance situation. This home was older and had been flipped by a local investor. They financed me for 3 to 6 months and then sold my loan to Countrywide Mortgage. I didn't understand the difference, and I was an aspiring homeowner. I was just happy to buy a home. Today, I still live in South Dallas. I'm raising 2 school-age children, and my wife is a nurse. My home is 100 years old this year. My neighborhood is 100 years old. Many of my middle-class working neighbors long for support for home repairs, not refinance strategies to kick the can and defer their debt. My neighbors want their homes paid off. They want to leave their homes to their children. They want to build wealth. My neighbors have equity in their homes, but are simply not engaged at the ground level with some of these opportunities to take advantage of them. I ask that Congress act to help improve the funding programs that are intended to support communities like mine at a ground level, some in a way that we can understand. Some of the resources, many of the resources, my neighbors just don't know about. And to piggyback on what was said by Mr. Matthews, gentrification is all around us. We see it. But it's because, again, my neighbors and homeowners, they can't afford to fix up their home. They're not getting a loan to fix up their home, but they're getting offers to sell their home. Don't know where they're going to go. They're having trouble relocating, but they're getting offers to sell their home every day, all day, phone calls, letters in the mail. So I would ask, one of the things that does work that I've benefited from, because I happen to have a historic property, I get a city tax abatement. So someone mentioned the tax freeze. I would hope that we could, again, incentivize those of us homeowners that repair their homes to make them affordable to stay there. Like, everybody doesn't want to cash out to relocate. But again, if that's the only way that you can get your cash and not increase your debt, that's what you're going to do, especially when you're on a fixed income. So that's my plea, to have opportunities or a representative that can speak to the community at a ground level that is interpretable, where we can understand it. I'm in the affordable housing space, so I understand a little bit. But most of my neighbors are just retired policemen, retired teachers. They don't know about all these programs. They don't have the stamina to go into all these banks and make all these phone calls for the effort. We need a ground level liaison to help bridge these opportunities that are supposed to be for our community.
Now,
So
you
again-
are in the South Boulevard Park Row area, right?
That is correct, Congresswoman.
Mr. Morris, that is the same area that we've been talking about. That's
So
in historic-
Congresswoman, supporting your point, if you look at those elements, the question is, do you work on legislation first? Or do you engage in these pilot programs where we can go into this particular neighborhood, take these 10 ingredients that we described, develop a roadmap. Maybe you do 3 or 5 or 7 of these across the country. And we then declare where are the problems where we need legislative support and where are the ways maybe we engage with the churches to develop this grassroots communication plan. And then there's opportunities for homeowners to be educated with regard to what the tools are. But the second element of our plan was a local development corporation to help with the repair and the maintenance of these particular homes, creating the broader element. So, Congresswoman, you're absolutely right. How is not only what should we do, but the question is how can we move together? So 5 years from now or 10 years from now, we're not having the same conversation again. I think Congressman Green should make a requirement in his legislation that if the dentist gets turned down on her loan, that loan officer has to go to that dentist for tooth repair. That would develop an incentive for that loan officer to maybe not turn down that dentist if he's required within 3 years of turning her down. That's the dentist that he has to go to. That would be an interesting dental opportunity after being turned down. So I apologize introducing the humor, but Congresswoman, you're absolutely right. This is exactly what we're talking about.
Well, thank you very much. And let me share with 2 members of Congress. This is an area that has been declared to be a historical area. It was occupied by the wealthier Jewish population 100 years ago, where there was Stanley Marcus and all the ones that had all the downtown department stores. The African Americans moved in 50 years ago. And at that time, they were fantastic homes, but to get a loan to pay for them, maximize what you had coming in. Most of those people now are retired or gone, but it's still an area that is historic and limited by what can happen. So I've been in touch with Mr. Morris to help me do a plan that would address this particular area and see whether we can get some type of single plan that all the residents can participate in, perhaps with the support of the city or foundation and the individuals, to do a plan by which I think could be replicated across this nation, where we as a people have inherited these old white neighborhoods. We want to be there. They were gorgeous homes in the beginning, but now the plumbing is deteriorating. There's no Wi-Fi that can be possible unless you got a cable television. But all of the problems actually that go with aging and the change of time. These homes are probably 100 years old, but very elegant homes, and people still love the area. I would like to see a more stabilized neighborhood, but they've got to have that infrastructure. They've got to have a way to bring them up to today. Now, when they built those homes, probably people didn't have more than one dress and two suits. The closets are such that one person can hardly get in and out. So those are the kinds of things that I think that are occurring around the nation, and the history of how they transform are about the same. The richer Anglo people move out, the educated and employed African Americans move in, and then they're frozen there. And the homes continue to age without the basic infrastructure improvements. Even the streets and sidewalks need to be replaced. I know that we could go on. That was our last witness. And I want to thank the staff for helping both in Dallas and in Washington, and say how grateful I am to the chairman of the committee, Mr. Green, for taking the time to listen to just a microcosm of our concerns here in Dallas. And we will get all the information that you might need, and certainly all that has been turned in. And if you need more, we will get it to you. I'm very, very grateful for all of our witnesses and all the people who might be listening some other places, because we know that Dallas is not a whole lot different from other major cities dealing with the same type of problems. We know about the new cities where we move into new infrastructure and don't have these problems, but keeping up our own neighborhoods with people who are committed to being in the inner city. We want to let them know that they're not forgotten, and we want the banks to understand that they need opportunities. Also, if we want to keep good representation in our areas, we must have educated young people remaining or coming back to these areas, and they will not do it unless it's somewhere to come to. So let me thank you so much. We will get all the information to you. I am so grateful to you, Chairwoman, and to Mr. Green for being with us. And I know that Houston and Los Angeles, and we can name any city USA, will have some of the same concerns that we have. Thank you so much for listening. And I'd like to have you make any final remarks.
Well, Eddie Bernice, I want to thank you for giving us the opportunity to engage with these leaders and these witnesses the way that you have today. I've learned an awful lot, and they have created some ideas for both me and Mr. Green that we can take a look at and work with you on. Eddie Bernice, this last witness that talked about these homes and the way that you have described them, and it's going to be interesting to find out whether or not there are a lot of other historical designations that should put us in a position of creating something special for saving and renovating these homes. I do know that HUD has had some programs in the past, one that my husband worked in years ago, where we afforded loans at 1%, very low, in order for people to be able to borrow money in the way that they could afford to pay it back. And of course, there may be some education that's needed about the equity that has been amassed in these homes. But you're absolutely right. Oftentimes in these kind of neighborhoods, they get the people who are basically interested in buying up those homes. And they want not only the homes, but they just want the land oftentimes to build condos on. We don't know what they're talking about, but you're absolutely right in the advocacy that's needed to tell people to stay, don't sell, and help them to be able to do the upkeep and the renovations that they need, because it's very costly to stay in old homes with the cost of utilities and all of that. But I will work with you and Mr. Green to see if we can talk about historic designations that might be, like you said, an example for the entire country, other than what the state is doing with historical designations, and see what we can do to tie some opportunities to the upkeep, renovations, and maintenance of those kind of properties. And this whole gentrification discussion basically also is important to this discussion about the older homes and people being able to stay in them. So you've given us a lot to think about today, and you've given us a lot of good information to act on and to talk about what's needed in the Dallas area. And of course, we're going to take it seriously, and I take it seriously. And I thank you for the opportunity. Thank you, Eddie Bernice.
Thank you very much. Mr. Green, did you want any closing statement?
Yes, thank you very much. First, let me thank you for the witnesses that you assembled. Absolutely outstanding, excellent information. And I'd like to acknowledge your staff, because this has gone glitchless, except for my not unmuting myself. Your staff did an outstanding job.
That's daily operational stuff.
Well, thank you. And I'd just like to add this to what you and Congresswoman Waters said about these older homes. When these homes were purchased, some of them were mansions, and the white flight took with them, when they left, white flight took the equity in the homes, because you could no longer borrow money. The redlining developed simply because the people left, and the people who had the homes now could not get the money for the kind of maintenance and upkeep of the homes that the previous occupants could get. And as a result, there is a need for some means of dealing with the inequity associated with the white flight. These were homes that should have been allowed to develop equity to the same extent as those homes on the other side of town did, but they didn't. So I understand the point, and I promise you we'll take a look at some of the means by which we might be able to deal with the inequalities that developed by virtue of simply white flight manifesting itself.
Thank you very much. And let me thank everyone again for joining us. Be sure to be in touch with the office for any additional materials. And if there are any spectators that have not spoken today, if you have additional input or points, we're willing to receive those as well. Let me especially thank Mr. Morris, who spent this entire time with us. And I know he knows all about what we're talking about. And he knows that as long as I'm in office, I'm going to be one of the people that's asking him to do something all the time for information. And also Mr. Matthews, who's been on the ground with us, helping to develop these areas. I'm delighted to have both of them with us today, and so delighted to have each of you as very good witnesses to join us. Thank you, and we will call this to a close.